Good morning, welcome to this update on Friday the 5th of August, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the markets and the news this morning. All the news yesterday was about the Bank of England, and we'll talk about that in a second. Reminder, today is non-farm payroll from the States, the single biggest, most significant news data event of the month. So we'll talk about that as we go through, looking at the charts and what you might be looking for from that. Okay, so over to the news, and the news yesterday was really only about one thing, and that was the Bank of England's rate reduction. We saw a rate reduction from 0.5% down to 0.25%. This was a unanimous decision on behalf of the members of the committee. If you're wondering, these numbers are the votes for the first number is increase, the second number is decrease, and the third number is hold or no change. So you'll see in the previous event we had 1 wanting to reduce the rate, but 8, the majority, wanting to hold the rate. So that's what that means there. The other interesting thing that shows here is an increase in the asset purchase facility. This is the buying of government bonds. We saw an increase in that. Also announced was £70 billion of quantitative easing, 10 billion in corporate bond buying, and a new lending scheme to the banks called TFS. So Mark Carney, the Bank of England governor, came to the table following Brexit, all guns blazing, and we saw everything possibly we could expect. The only other thing that would have been a possibility was a reduction to a 0% interest rate. We didn't see that, but the additional bond buying, etc., on top of that effectively was a positive in terms of the rate reduction, or on top of the rate reduction. The one thing Mark Carney was quite scathing, though, about negative interest rates. I don't think we'll see, under his governorship, I don't think we'll see negative interest rates at the Bank of England. However, we do potentially see a move down to 0% as a maximum, but clearly that doesn't leave a lot to play with. But that puts him in the same boat as most central banks around the world at this current time. Okay, other numbers of interest. Yes, we had the unemployment claims out of the States, which came in roughly on forecast. We've got non-farm payroll coming out this week. We had a huge number last month, following a very, very low number the previous month. Looking at what's been forecast here, the forecasters are looking and suggesting that we'll see some stabilisation in those figures. We'll also be interested in the average hourly earnings figures. We saw a drop last month from 0.2 to 0.1. Forecast is back up to 0.2, so that will have an effect also. Okay, so what actually went on yesterday? Well, here's the dollar index. We've seen two bullish days out of the dollar index. It became bullish as the pound weakened, not exclusively because of that. But the interesting thing for me here is we've got some dollar strength here, but what we haven't seen is it reflected in the yen. The same 2 days are incredibly static, ranging days or doji days, whatever you want to call them, around or just above this level of 100.75. I would have expected to see some sort of weakening of the yen into those 2 days of strengthening US dollar. So a little bit surprising there. Clearly no intervention from the Bank of Japan, because that would have been an ideal opportunity for them to add a little bit of muscle to reduce the rate at that point, but nothing happening there at all at this moment in time. Over on the pound, where all the action was yesterday, well, the significant factor for me was the triangle formation we had around price prior to the announcement. It would have been lovely to be short at the top of the triangle here, but here at Phoenix Blue, we'd never force that situation. We don't actually trade the news events. If we'd had a genuine reason to be able to get into a trade at that level, that would have been great. We wouldn't force our way in order just to trade through a news event on the basis that we have no control over the results. We can't judge probability on it in the same way as we do other trades. The really interesting thing for me, however, on this yesterday was I was watching this live, and this dashed line through here is the point of control, which goes right through the tip of the triangle there, and watching price before the announcement perfectly just holding around this level. The triangle indicates a lack of decision or indecision. The fact that then the ultimate level of indecision, which is this point of control here, price was literally within 10-15 pips either side, moving either side of that prior to the announcement, was very interesting to watch and really reinforced the strength and the meaning of triangles. So it might be worth you looking at that particular area on smaller time frames and to see what I mean there. Really, really interesting. The net result of what we got was a huge 200 pip bearish move. We're still within the range that we've got shown here. There's still potential for further downside, so we will be looking for potential trades below this level, even a pullback to this level here to take a trade there. But going forward, there remains the possibility of even new lows down to about 1.25 being the next big round number. But we'll be looking to see how that plays out. We'll not be looking to be in any markets today because of non-farm payroll. Any markets that we're already in, we'll be looking to take money off the table, put stops at break even cut our losses on trades where we may be in a negative position at this moment in time, but we are at risk of being in a further negative position or simply being stopped out on the result of NFP. We're at a time of year where there is very low liquidity, so any figures that are outside the expected range on NFP are going to see some very volatile movement, so potentially a little bit more cautious today than even on a normal non-farm payroll day. Here's the Aussie. We're short in the Aussie at the moment. You can see our entry here. Our entry was ideally through the top of this triangle here. Price is pushed above that. There is a horizontal level, another level where it is at this moment in time. This is a classic case for non-farm payroll. If we are not in profit, say late morning, 12 o'clock today, I'll look at closing that, even if it means taking a loss, because simple volatility, even if price is to fall based on non-farm payroll, we could quite easily be stopped out in the volatility. So it's a case of protecting what we've got, even if that means taking a small hit. Better to take a smaller hit than lose our full risk simply on volatility. Another trade that we'll be looking at later this morning that we're in is crude oil. Our bias is short crude oil. There's a nice level through here. You can see that we traded yesterday. We're in profit at this moment in time. If we can get 50 pips up in this market, stops to break even, half our money off the table, that will be a trade that we'd leave because we'd got no risk going forward through non-farm payroll. Okay, over to gold, and we'll look at the equities markets in a minute as well. We are at an interesting point vis-a-vis risk on, risk off. We're clearly at some sort of potential top here on gold. This is the daily chart, a potential double top there. This trend line here is from the weekly. You can see touch, and then a double touch through there. So that's a really significant level. I've also got a rising wedge marked on here. Now the reason I've got that is because this market has failed to break down to the downside continuously right through this period here. We have a commitment of traders extreme signal, which means the commercial traders have reached an extreme position, which normally leads to a top in this market. With fundamental events, though, that top hasn't yet come. So I will be looking for extra confirmation before trading anything short. So I'll be looking for a break out of below the rising wedge, and then a pullback potentially to some intraday level or some level through here in order to take down to a first target here. Now, because of what I've already just mentioned, I'll be looking to take money off the table here. If price breaks that, I'll be looking for another opportunity to trade between these levels. I won't be looking to take my risk through those levels because, again, normally in normal circumstances, we would expect to see that in a risk-off scenario, but such as the US equities are at all-time highs, so we have no levels to work with going forward if they continue to be bullish. Now here is the S&P. Now earlier in the week we were short equities markets. We were particularly interested in the DAX, which was most aggressively short, but almost without exception, and the only exception I can really think of is the Nikkei. All three American indexes, the S&P, the Dow, and the Nasdaq, all have this level through here. They've pulled back to this level after what I think I read was the most inactive range for 10-15 years. This period here, we don't usually see the S&P ranging in that way. That suggests an unwillingness to pull back. So we are now looking for potential long side to all these equities markets. If we get NFP figures that weaken the dollar, making exporting better for the businesses in the S&P and the Dow, we'll definitely be looking for a long side, a break of the high and a retest to take that longer. The FTSE also has a very similar trend line, as you can see here. Now we are bullish this market following the reduction or the bearish move on the pound after the Bank of England announcement. We see potential more downside on that. Within the members of the FTSE, or the companies involved in the FTSE 100, are predominantly companies that earn a great deal of their income in foreign currencies, so a weaker pound actually generates effectively profits for them. So we have a fundamental reason to take this market long, and it did had an alert tell me that it did break above this level earlier this morning. So we'll be looking for long side there. We'll be looking for dollar weakness for additional long side in the American stock markets as well. Okay guys, that's the summary today. So non-farm payroll today, probably better to be out of the market as much as possible. Now if you like the way that we look at the markets with a fundamental bias, a technical bias, commitment of traders, seasonality, there's a chance to come and trade alongside two of our most senior traders on the 24th of August in London. If you are interested, just pop onto our website, phoenixblue.co.uk, register, and we'll send you an invite for the event. It's absolutely free. You'll get all the time you want to ask questions, the opportunity to meet and talk with existing Phoenix Blue members. So please do come along to that event. If you have any questions in general, you can email us at info@phoenixblue.co.uk, or I'm on tom@phoenixblue.co.uk if you've got any questions about this specific video. Okay, have a safe day trading, have a great weekend, and we'll be back with you on Monday. Goodbye.